this is a great question that's popped up, and I think it's a terrific topic to just do a little bit of more discussion on, and that's this. How can I align some expectations for what I'm going to expect to trade next week? At least start looking in the right direction and use two really cool tools. So this is how I determine the directional bias in many ways. We have our VWAPs, and those are the anchored VWAPs that allow us to see if price is above or below the first of the month in a 10-day rolling. But the other tool down here, our JT Multi, is a more trend-oriented, longer-term tool that's measuring the 8 exponential, 13, and 21 EMAs over the 34. That's why there's two rows here. I believe the 8, 13, 21, this top row, is more sentiment and momentum, right? A shorter term view, but not really a pure trend sort of confirmation view. That, I believe, it's this lower. The lower is the 34. And if I'm trying to understand a trend, it really is this wave measurement. So again, 8, 13, 21 is the upper row. The trend, bullish, bearish, neutral, that's the lower row. So these trade flags line up with the colors of the JT Multi. So the JT trade flag aligns with the JT Multi. And you might ask, what's the difference? Actually, there's no difference. The trade flag, which you all will see on my charts a lot, that's what's happening right now. What you have in the JT Multi is the history of what has been happening. So I can assess a shift in the trend compared to how long the trend was moving higher or lower. And that history really is a game changer. It's absolutely a game changer. So when folks ask me, what are the colors? Top row, 8, 13, 21, really in line with the trade flag. And the second, the wave, is the 34. Now, the wave for me is synonymous with the 34 EMA. So it's the 34 EMA wave. And then that's what's going to help me understand the directional bias, really the VWAP, and the JT Multi is going to give me a really good, consistent, objective way to understand directional bias in any market, not just indices, in any market going forward. So if I want to do that for the S&P, it's neutral. Neutral trend, just barely bullish on the sentiment and momentum measured by the VWAP. On the NASDAQ, neutral trend, much longer neutral trend than compared to the S&P, and just barely bullish based upon the VWAP. So the near-term sentiment, day trading sentiment versus the longer-term trend. And this is a non-trending market. What about the Russell? Very choppy. The Russell's been choppy since the 23rd of March. This is not a new chop. And just being aggressive about this market suddenly being trending is a very bad idea, because this market has been sideways for so very long, and we need a much better pattern and setup to prove that it's ready to start to reorganize into an uptrend, which I don't see us being anywhere near doing. So be careful with that. However, a lot of what we do is we'll start to say, well, is there a better structure on the XLI than the YM? There is. Is there a better structure on financials than the S&P? And how? Is there a better structure on the XLV than the S&P or the YM? Absolutely. And that's where we can start to say, look, in this environment, in 2020, in 2020 versus 2021, in this environment, the difference between 2020 and 2021 could not be more stark and in many ways more brutal. So really the best thing that any trader and investor can do right now is just get amnesia about 2020. Just forget it ever even happened. Be glad for whatever you made, hang on to what you did, and realize that whatever you did in 2020 is not necessarily going to be able to be applied in the same way. If you were a trend trader in 2020, you could be a trend trader in 2021, but it's not the buy everything market. If you're a day trader in 2020, you can be a day trader in 2021, but you're going to have to be a little bit more vigilant about day-to-day or week-to-week directional bias assessments and where we are trending and not trending. If you're an ETF or stock trader, I think you're actually really well suited for 2021, as long as you're not somehow obtusely fixated to tech. right? Instead, you're looking at things like financials and healthcare and industrials and transports and commodities. Those trends have been fantastic. But if you're stuck in the old, well, tech is going to take off thing, it's going to be a miserable year. So just take what you know, because clearly you did something right in 2020, and just know why it worked. And there's nothing sadder than seeing a trader who did really, really well in 2020, really clueless about what they did so right, and then not able to extract that from clearly a skill set that they have and apply it to 2021. And that's what I'm hoping you guys are seeing me show you how to do. So you can say, wait a minute, I did do things well in 2020, right? How can I take that and apply it to 2021 and really show that, hey, if I'm going to have a test in my trading career, 2021 is it. If I'm going to have a test in my trading career, can I find what I did right and just replicate that? That's where it gets really exciting.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me